everyone, Swing Pony here. Welcome to the Place Your Trades Network, where we discuss trading daily options using the CME Group's event contracts. These give us access to 10 different futures markets, including gold, copper, natural gas, the E-mini S&P, NASDAQ, and more. We have a great show ahead. I think it's a very timely topic as all the bulls and the bears are fighting about what happens next. Leah is going to be joining me as a guest today. She is an author, she is a trader, she's got a background in psychology. And what we're going to discuss is letting go of your attachment to the outcome. This is something we've all dealt with before. It shows up in different ways. It could be, your bull bear thesis. It could be hitting a certain price target. It could be, a company that you really, really believe in and you're investing in, even though the technicals are telling you otherwise. It could even be something like your daily profit goal or your ultimate account goal. So being attached to an outcome can often lead to disappointment. It's great to have goals. It's great to have a thesis. It's great to have conviction. But when you have an unwavering attachment to an outcome, that often sets you up for disappointment and a lot of times emotional decision making. So we're going to talk to Leah about all of that. Before we get started, though, this podcast is brought to you by Tradeovate. They're the ones who put together this awesome custom app that we all use to trade the event contracts. So if you're interested in trading them with us, we've got a great team. They're streaming live every day, and they're coming up with different strategies and teaching you how to use them. So just download the app and you can get started. All right, guys, let's go ahead and get Leah Holmgren out here. Hi, Leah.
Hi there. Hello. How are you?
Good. Thank you for joining me.
Yeah, it's my pleasure. I'm excited to talk to you tonight.
Yeah, I was excited to talk to you because you have a very versatile background. I know trading, relationship coaching, you have a book, you're a published author. Tell me a little bit about you and your background in terms of both psychology, trading, and writing.
So I used to be a couples counselor, specializing in relationships and intimacy for almost a decade. And in COVID, I moved to trading. And since then, I've been trading almost daily. It's a very rare when I take day off of trading. I don't even know if I took really a day off. But anyways, so it's hard. Yeah, it's my new obsession, and I really enjoy it. And as I've been trading for 3 years now, I realize how much psychology goes into trading. And I studied psychology and biology in my undergrad, and I went to pre-med, and then I studied mediation and negotiation as my master's, and that all helped me to help couples resolve conflicts and relational issues, I would say so. So now, there is a lot of the science that I'm using in trading, and I think it's more about psychology than about math, to be honest.
I totally agree. Honestly, I think once you figure out the psychology aspect of it, it's everything else that's a lot easier in a lot of ways, because I think we can be our own worst enemies. Like we can, whether we're overthinking, we're over trading, the greed, the FOMO, like there's a lot of emotions that come to the surface when it comes to trading.
Absolutely, yeah, and every mistake that we make, emotional mistake, costs us money, which in life is not like that because we can always fix
Right.
it. But these things,
That's a
everything
great
we do
point.
is very expensive. So yeah, it's a great learning experience, and if we don't master it, it can end up pretty badly. So I really
For
love to help
sure.
people.
For
Yeah,
sure.
help
It's a
people.
completely different experience than anything else
Yeah.
out there. We have a great topic ahead. So what we're going to discuss today, letting go of your attachment to the outcome. So, this is kind of interesting to me because you have a background in relationship coaching, and I sort of think of people who go on dates and sort of like put a person on a pedestal or expect the night to end up a certain way, or just have these expectations of how things are going to turn out instead of just casually dating and having fun and looking for the right one when they come along, and not holding such a rigid standard to what their experience is going to be. I kind of think of that similarity in terms of trading, like people who are so fixated on a single setup working out. Like, this is the guy, this is the one I'm going to marry. He's the one. and they're completely missing out all the other opportunities. Or let's say that somebody who's had a breakup and they can't stop thinking about that one person, and yet there's plenty of fish in the sea, but they can't see that because they're so fixated on one. Do you kind of
Yeah,
find some parallels in terms of trading and relationships and all of that?
I do. And also around success. I feel like a lot of people that are extremely successful, they don't have such a strong attachment to anything. They are more disattached. So I think like non-attachment could be really key to success in business, in
Mhm.
relationships, and everything, because what it means, you're not attached to a certain outcome, and you are not attached to certain, you're flexible. You know, you can adjust to situations as they go, and life is very dynamic, and the stock market is extremely dynamic, and we have to be able to change our mind very quickly. So usually people that are not attached, they're more flexible, I feel like. And that's the
I
same
agree.
with trading. Yeah,
Yeah, I
because it
agree.
shows.
I think it is a
Yeah,
difference between being rigid and flexible. I think Mark Douglas, he has this quote about how we should be rigid in our rules and flexible in our expectations. But people
exactly.
oftentimes do the opposite. And I think the
Hmm.
way that this shows up in terms of trading, I mean, it could be this is a good topic right now too, where we're at such a critical and interesting point in the market where, the perma bears are just like jonesing for us to, have a limit down day. The bulls are like, no, this is a new bull market. Like everybody's sort of feeling certain extremes and they have a very big commitment to their bias. So I think, whether it's a bull or bear bias, whether it's a company that you're attached to and you're continuing to invest in, even though the technicals are awful, or whether it's, a daily profit goal or what you're trying to get your account to. I think all of these things, when you're super, super fixated on them, you become a bit blinded to the ability to execute objectively.
Absolutely, yeah, because you're fixed on the outcome and you're hoping, and hope is not a good trading strategy. And instead of seeing the situation, and it's also strongly influenced by ego, because there's a great book from Ned Davis that I read that says being right or making money. So oftentimes our ego wants us to be right, and we don't have the ability to cut losses quickly because we are wrong. And I remember when I started trading, every time I had a loss, I was feeling so bad about myself. I literally called myself an idiot. Like I would hate
Yeah,
myself. Now I'm just like, okay, whatever. Like you have to get to the point when you're not emotional about this, because imagine that one trade, every trade every losing trade that you have, it's going to define who you are, and that's how you're going to feel. Like in a trading career of 20,
horrible.
30 years, there are thousands of trades that go wrong. So you need to be absolutely cold about it, and it's really difficult. But it's again the
It is
non-attachment.
difficult.
It is very
It is
difficult, but I think it's possible.
What do you think some of the reasons are that people do become so attached to the outcome? I know you mentioned, it sort of becomes a part of your ego, your identity. Like if this goes well, you get a sense of validation. But what are some other reasons, do you think?
We just want to be right. We have the burning desire to be right. Like imagine when you have a discussion with someone and they prove that you were wrong in the discussion, that you were trying to say something and explain something, and then they prove you wrong. It feels really sucky. Like it's bad
Totally.
feeling. And the same thing is with the market. You're having discussion with the stocks. And I think
Yeah.
that, people to stop the attachment, a great way is to stop having those conversations and stop defining yourself as a human being depending on the trait.
hmm
You know, so like, oh, I hope this trade is going to go well. Or like, oftentimes you see when someone is an amateur because they keep commenting on the market and say, oh, it's so volatile. Oh, I have to make this trade. Complaining about the market, complaining about the trades. Oh, I hope this trade goes well. And all this wording that you're using is just saying that someone is very new to the market and can't control the emotions, because professional traders don't talk like that.
I
Or most
love
of them
that. I love what you said because I do think our verbiage shapes our world. Like words aren't just words. The words you use are very telling about sort of your mindset and the perspective that you're coming from.
Yeah. And what helps as well when you're in the trade, I think that not looking at the live P&L helps really well. I suggested to traders when I'm coaching them on psychology of trading to not look at the P&L, because that creates even worse emotions. And if you have your plan and you know where you want to get in and out, you risk certain amount of money. You just don't look at the P&L. That helps. So the wording, the P&L, and then of course, like, keep yourself in balance, like have a balanced life, relax when the time to relax is there, and utilize your time off. I think that all helps us to be more to have like less fight or flight response, because trading ultimately will bring fight or flight response. And because when
Oh,
we are in a
yeah.
trade losing money, we are kind of like, oh my god, it's the same like when you're running in front of a predator. And if you do that 5 days a week, you want to make sure that you calm down your nervous system on the weekends, so you are able to actually control your emotions more. And I think that's very important as well.
That's a really fascinating way that you put it. It's like running from a predator 5 days a week. Trading is very stimulating. For better or worse, it's very stimulating. And I love what you said about needing to like relax and enjoy a life outside of it, because if you don't,
Yeah.
that fight or flight response sort of becomes your norm, to where even if you have an opportunity to relax, like it's not your natural state of being. So you kind of just jump back into the things that stress you out and make you nervous. And I do think another thing that sort of creates this attachment to outcome is a bit of a scarcity mindset. Like when you're coming from a place of lack instead of abundance. Like if you're attached to an outcome, you have tunnel vision. Like this is the trade. This has to work out. This is the company. This is the profit goal that I have to make today. When you get in such tunnel vision, you're losing sight of the fact that like the market is filled with endless opportunity.
Opportunities, exactly. Yeah. And then
And
like being married to a stock is the worst. Like I honestly suggest everyone to not do that, because it's a stock. Like there's no point of
right,
holding something that's going against you. And I read this book from the stock operator, Reminiscence of Stock Operator, about Jesse Livermore. He was like, the guy was trading back in the days, and he said a beautiful thing, and that's happening a lot of times when we are attached to an outcome. This is like the process. When the stock goes against us, we are losing more and more money, and instead of cutting the losses quickly, we will start hoping that it's going to go my way. Why wouldn't it go my way? I'm a good human being, it needs to go my way. And you're waiting and
right.
waiting, hoping, and then it's just too much, the losses. And when you trade options, for example, it might be completely going to zero. And instead of swapping these emotions, when the trade goes against us, we need to be fearful. And when it goes for us and we are making money, we need to have the hope and stay in the trade longer. And that's why
Right.
most traders fail, because they do exactly the opposite. They should be scared when it goes against them and hope when it goes in your favor. But that's very difficult. But I love
It
that part
is.
in the really nice.
It is. Yeah, I think the way you said that is very interesting, because sometimes a lot of the things that we do seem counterintuitive, especially in hindsight,
Oh
but
yeah.
it's the emotions that take over while we're in the trade. And I think one of the most difficult things, and here's actually an interesting parallel for you. You're familiar with like the attachment styles in relationships, right? Like secure,
Absolutely.
anxious.
Yeah.
So I
Yeah.
kind of think of somebody who's very attached to the outcome as like the anxious attachment style. And somebody who comes in every day, no bias, they accept the uncertainty the market offers, is a very secure attachment style, because they
Yeah.
know the opportunities are going to be there. They're going to find the trade that's right for them. They're going to wait for the right setup. They're not trying to like hold on to this intense hope that this trade is going to play out, even though it looks like it's not.
Yeah, but it's trading is truly stressful. I mean, I think it's the worst. It's the worst industry when it comes to money, because imagine every single performance is graded by how much money we make or we lose. No one has the same. Not even a doctor or a lawyer, or like even like Tiger Woods when he plays golf. Even if he doesn't win one match, he's still gonna get paid.
I think it comes from like the pressure. So, what are some of the ways that people can let go of their attachment to an outcome?
So first of all, we need to put our ego aside, because ego is not a good friend, and most of the times ego costs us a lot of money. You know, from paying for expensive cars and table service and whatever you call it. It's all, we all do it for ego, to feel good about ourselves, which is unnecessary. And I think in trading, the same thing. Number one, to put your ego aside. It doesn't matter if you're wrong. You know, there will be another trade. As you said, there are so many opportunities in the trading world. And another one is act like a robot. And then change your wording, as I already said. You know, this words like, oh, I hope this, I hope that, you know, I can't lose this trade. Oh my God, I need this trade for my XYZ. That's not a good wording, because it subconsciously puts pressure on you, or on, you know, on a trader. So I think that's very important. Is like,
I think, I'm sorry to interrupt you, but I think what you just said there, when you start to say, I hope, that could be a good mental indicator to take note of. Anytime I say, I hope, or I have a certain type of verbiage that comes up, wait a minute, that's my cue. I might not be making the best trade here. I love that.
Yeah, exactly. That's good. Yeah. And then, you know, practice the non-attachment, you know, have a flexible mind. For example, when you have flexible mind and you have no attachment, you also accept constructive criticism better. And now I'm not meaning offenses on Twitter, but constructive criticism from other people. Because if you're unable to accept and understand constructive criticism, you will never really grow. If people can't tell you what they really think about your product or your service or whatever you offer, or about you as well as a human being. I personally love to know what people think, and sure, like it has these feelings inside of me, like I get like warm. I'm like, someone doesn't like me or doesn't want criticizes me, but I really want to learn, and that's a great way to practice non-attachment. Ask people for feedback and tell them, you know, I want you to be honest with me, and then see what happens with you, what state it brings you to, and how you react to it. Are you reactive? That means that you are not emotionally advanced, and it's not going to be suiting you well in trading. So that's a great, it's just a way to practice, because otherwise it's really hard to practice this non-attachment, you know.
No,
like
it is uncomfortable.
It is, yeah.
It is uncomfortable, yeah, when somebody critiques us, or but then, like you said, you have the moment where you realize, wait a minute, you know, of course it depends on if it's somebody whose opinion, you know, brings value. But when it is somebody who could be a mentor, somebody you trust, and they give you that feedback, it might sting a little bit at first, but that could be what propels you into growth and into the next level.
Yeah. And then, you know, attachment is also a sign of emotional dependence. And that's not good for dependence of any kind, is not good for us. So I think that truly practicing non-attachment, no ego, that change the way we talk to ourselves while we trade and in life is very important. And relax, utilize the time off. These 4 things I think are super important for mastering this part. You know?
Yeah, no, I agree. You know, another one that I think is super important and is sort of relevant to everything in life is just to learn to be more present. Because I think we are, you know, especially with our cell phones at our fingertips all the time, like our computers everywhere. Like it's very hard these days, I feel like, to see anybody doing any activity without their phone in one hand and constantly just checking it. It's this horrible instinct that even I'm guilty of, and I'm trying to figure out how to cut back. All the time. But it's like, how are you actually present if you're watching TV and you're watching your phone? You're hanging out with friends and you're capturing the moment to post to social media to show to everybody else.
Or driving.
You know, or driving. Any situation there's a phone involved these days. And so I think that also leads us to, you know, when you're not present, I feel like you're always either in the past or in the future. And that is not a good state of constant being. If we spend the majority of our time in the past and in the future, we can't really be present and see the opportunities that are in front of us. We can't see the market say, hey, you know what? This was a short, but it's time to pivot. It's time to go long. Like you're not able to read the cues and the signals as much because you're so attached to a future outcome that may not
to your
happen.
bias. Yeah, absolutely. I love it. And that's the thing, like, oh, okay, if this trade goes my way, I'm going to make this amount of money. And you're so fixated on that amount that you just stay in the trade for too long and don't see that the trade goes against you and the market reversed. And as you said, right now we are like literally like right there, like where we go
Right
from.
there. The
It's
I
so
call
bad,
it like
you
it's
know.
like the most emotional like
It
area
is,
that we're
yeah. I
trading in
honestly,
right
I
now.
learned to just not care. I really don't care. Sure, I would love to see my long-term portfolios to rally, but I'm also enjoying this trading. It's like fun,
It
every
is
day is
fun.
a new day. So I kind of got to the point that I really like, I have zero expectations and
Attachment.
attachment. And I'm like, okay, it's just like a very fast pacing market. So what I do, like usually I would love to let my trades run longer. But sadly
Sure.
this year, it's just quick in
Hard
and out, couple of days. Instead of 4 or 5 or a week or two, I stay in swing trades for 3 4 days.
for
It's just,
sure.
but it
I
is
mean,
what it
look,
is.
I
I
love
adjusted to
yeah,
that.
you adapted. No, I'm
Yeah,
with you. Like I loved swing trading. I loved it. In this market, it's a little bit trickier.
yeah,
And you sort of have to take the opportunities that come at you. And I'm with you. It's actually fun to go from bull to bear
yeah,
and back and forth within the same day, within the same week. Like, if you look at it, they always say that there's like a fine line between fear and excitement. If you look at it in a standpoint of it being like actually exciting, like I can flip my bias, I can do
yeah.
whatever the market is signaling for me to do. It puts you in a position to where you're a lot more receptive to uncertainty because I want your opinion on this. Do you think part of why people become so attached to the outcome is because they want certainty? It's
People do like
hard.
certainty. Yeah, of course. And then this market is really uncomfortable for people that are used to invest and hold. And, this
Right.
market is everything but certain. But was the market ever certain? Of course, we had like a crazy bull market. But even in the last 12 years, there were some years where the market dipped badly, like 2018, 17, 18,
Mhm.
like it was scary. And every time people freak out. So there's never certainty in trading. I think if you want certainty, then you shouldn't be trading. That's going to be
Yeah.
really hard. Yeah.
Yes.
So people they crave. I think like most traders, they actually like the variety. They like the excitement. I think that's the
Mhm.
personalities that we have, because otherwise
Mhm.
it's not for you. It's not. It's like then
Otherwise, it's
buy
torture.
torture, then buy dividend stocks and just hold your dividend stocks and call it a day, and that's it. Or have like stable investments. And now we have money
Mhm.
market funds. They're great. They're great for people. They want stability and they want certainty. But in the markets, no way. As a trader, it doesn't exist. I
No, I
love it.
agree.
I don't like certainty. It's
It
boring.
See, that's the kind of personality that thrives in this, though, because like
Mhm.
you said, like, for you, it's exciting. It's not like, "Oh my gosh, I have no idea what the market's gonna do today." Like, that terrifies me. It's, "I have no idea what the market's gonna do today. Let's see
Yeah,
what we got in store for us." Like,
yeah,
it's fun, and I love the other thing that adds to, like, all the volatility is how right now we're at a stage where it feels like every economic event and every time the Fed is speaking, like, matters, and
yeah,
to me, that's also a lot of fun because I'm like, "Oh, like, let's see what kinda candle we get here," like, as soon as they start, as soon as they end, like, it's a lot of fun, and I think there are a lot of opportunities to capitalize on it. You gotta be quick, and you gotta be willing to adapt, and you can't just fixate on one outcome because what happens when you fixate, I think that's when you start doubling down. That's when you start
yeah,
averaging down. That's when you start putting all of your capital towards one position and you completely lose sight that the opposite could happen. And that I
yeah.
think is what gets you in trouble.
Yeah, that's important. Every trade, think about both sides. Great, this is
Yes.
possible, but that is also possible. And I think in this
Yes.
market, like right now, it's really important to have strict stop losses in case the market really goes against you, because it might. Who knows? I mean, we might be out of the woods. There's still a fair amount of bears and bulls on Twitter and everywhere.
Yeah.
Even like friends in hedge funds I talk to.
Oh,
There
yeah.
are like many bears still out there. They just can't believe that we rallied like this. And, and we might have dips on the way. It's great. Just as I said, adjust to every
For
day is
sure.
a new day. That's
The
very
bottom
important.
line is, everyone's going to be right at some point, right?
Yeah.
For the most part. So I've seen certain
Just keep
bears who are
posting
constantly, the
I
bears
told
who
you
have been
so.
posting nonstop about, and then we got like one day where the market goes down and they're like all in and they're like, see, my thesis was right. And like, the conviction is just a little bit too much.
It's too much because the same with stocks, like when you post a chart, then you have these people, they just say, oh, you're wrong. And the next day I'm right. And the next day I'm wrong. Like, this is the market, like
This
trade.
is the
It's
market.
like, this market is quick. You in and out, make the trade your own. You don't take the trade if you don't want. But, exactly, like the stocks are moving. So you're right one day, then not right. Like, yeah, it is what it is. It's quite entertaining, but
It is. And I think, gosh, what was I going to say? I have this joke. I'm like, make like a burger and get in and out because that's the kind of market that we're in.
exactly. Yeah, it's tough. Like I
And
had to adjust to that too, because sometimes it's better to hold and sometimes it's better to be quicker, and it's just constant adjustment. Like you have to find your edge, and it's not doesn't mean that the edge is gonna work forever. That's another
yeah,
thing that we have to we have to get rid of the attachment to our thesis and or our edge, our strategy,
for
because
sure.
we might change them.
For sure.
All
And
the
I
time.
think what you mentioned earlier is super important to have like both a bull and bear thesis. So, if you have a bunch of chart setups that you're looking at for the next day and you're only charting the bull side, maybe you're already sort of projecting your bias on there, right? Why not have a handful of, okay, these are my really strong bull setups. It could be the same chart or it could be a different one where you're looking at some bearish setups. But I think preparing yourself in that way before the trading day begins already puts you in a position to capitalize on whatever happens. It's sort of when we go in only in one direction that we tend to get in trouble.
That's why it's hard to do charts the night before. I quite frankly think it's a waste of time because market moves so much overnight. And good for people
Yes.
they trade futures, but if you don't, I just stopped doing that. I rather wake up at 8 in the morning or 7:30. I
See
start
what's
working
there.
at 8 and I prepare my charts because and even then is sometimes it doesn't work well because the market even changes from like 8 a.m. till 9:30. But it's good
For
to
sure.
just be and I have the levels and just trade off the levels. I think that's the most important. Forget bull or bear thesis. Just have levels on the chart and
Levels.
say, that's it. Yeah, price action.
More of like an if then statement. If X, then I do Y.
Yeah, that's the best. Yeah. No bull or bear, it doesn't matter. Like today I was so excited to trade Tesla long, and I should have rather traded it short, but because I was so fixated, I didn't even
Yeah,
take the trade at the end, but it would have been a great short. And and
for
I
sure.
traded something else today, which worked out really well. But still, I was just laughing about it because it was such a great short on Tesla this morning, and I didn't take it because I was really thinking it's gonna go. I mean, you could probably take it short and long and short and long. It was like a choppy day today on Tesla.
It
Tesla was not.
was.
Yeah, but that was just like what I was thinking when I was getting ready for talking to you today for the interview. I was like, oh, that's exactly when I wasn't flexible. And
Yes.
we will
No,
still
it
do it.
happens.
It didn't cost me
Well, no,
money. That's support.
that's the most important thing. And I think the most important thing when it comes to like all these psychological lessons and stuff is that just because we talk about them doesn't mean we have it mastered. Like all humans, like human beings are complex. Our minds, our emotions are complex. So people who've been doing this for years and years and years and years are still faced with their trading demons and their mistakes and their emotions and their biases. So it's sort of just having the conversations and building awareness so that the next time we find ourselves in these positions, maybe we'll think about it a little differently.
Yeah, absolutely, and that's important. It's good. It's great that you do this for people and you do this interviews and talk about psychology. I enjoy it as well, and I really love coaching people on trading psychology. And what I want to say, it's important to master the psychology before you put all your money into the market. I think that's very
Yes.
important, not the other way around. That's what I would
Yes.
suggest to everyone starting trading.
Which I think it's been an interesting market in the sense that a lot of the newer traders, which I am a part of, over the last 2-3 years, you sort of enter the market not knowing anything about what you're doing. The market's booming, and then you sort of have to relearn the psychological side a little bit later when all the challenges and obstacles come your way. So it's been fun. It's been chaotic, but it's been fun.
It's been super fun. Yeah, I'm enjoying it a lot as well. Nice.
Perfect, Leah. Well, thank you so much. It was lovely having you on.
Thank you for having me. I really enjoyed talking to you. I would talk to you for
Yeah.
hours.
No, I know. That's like I told you earlier, the biggest challenge for me with this podcast is like I could sit here and we could talk for 3 hours. So if we ever meet in person, we'll go out and we'll have dinner and we'll do it over that.
Yes, let's do it.
All right. Thank you so
All right.
much.
Thank you. Have a good night. Bye.
Bye. All right, guys, that was a fantastic episode with Leah. I loved her insights on really watching the words that you're using because our language really shapes our experience. When we start to say things like, I hope, might mean that we're very much fixated on an outcome. And I think that's a great sort of trigger to be aware of as you're trading. Like we discussed as well, just the importance of being very present and being very open and objective to the opportunities that the markets are giving you, always planning both a bull and bear thesis. All of these things are really going to help us, manage the uncertainty that comes with the market and just be able to seize the opportunities that it gives us. Before we wrap this up, I do want to read a quote from Mark Douglas's Trading in the Zone because I think he explains, our attachment to the outcome perfectly. So he says, keep in mind that nothing has more potential to cause emotional discord than our unfulfilled expectations. Emotional pain is a universal response when the outside world expresses itself in a way that doesn't reflect what we expect or believe to be true. As a result, any market information that does not confirm our expectations is automatically defined and interpreted as threatening. That interpretation causes us to adopt a negatively charged defensive state of mind where we end up creating the very experience we're trying to avoid. This man, he's so good with words, so good with words. But what he explains there is the issue with being attached to an outcome. This is what drives us to do things like average down, double down, fight the trend, put all of our capital into a single direction, really just detrimental patterns and behaviors that are going to wreck our trading accounts. So, it's something we're all learning to do and just going into the market every day on neutral and being open and having different setups and taking advantage of the versatility that we're seeing right now. So would love to hear y'all's thoughts on this. If you have any thoughts on how, you manage your trades and what you do not to go in with a bias or expectation, I'd love to hear it. Just tweet it at me or leave a comment. I'll see you guys next week.